Okay, so today we're going to cover most of the major markets and to see what we can do and where's our trading plans. All right. Okay. All right. So first of all, for the gold, okay, the gold has touched 1,700 this level. Okay, and it finished three. We call it the three drive. Okay, finish the three drive patterns, and we found out there's a beautiful reversal sign here. Okay, this is a rally based drop. Okay, which is a reversal sign, and let's go to the forward chart. And we can see that there's a mini head and shoulder patterns here. Okay, or we call Libra patterns. Right, it looks something like this. Okay. Okay, so the neckline has been broken here, and now the price is pulling back to this level. We can draw a Fibonacci retracement from here, and we can see that the gold is likely to retrace to 618, and then we can catch another shorting opportunities. All right, so focus on 1679.72, this level, about 1680. Okay, find your short position here, and look left. There's a beautiful structure. All right, so this will be a quite convincing trade that we can looking for shorting opportunities to sell the high. Okay, so basically I can feel that the gold has already break this trend line. Trend line was broken and retest, and we want to sell the high to catch another fall of the previous wave, which is about almost $70, which is 700 pips move. Okay, so let's do ABCD patterns that are this going to tell us the gold is may give us the 1620 at this level. So we're shorting from 1680 and aim 1620, which we can earn about 600 pips. All right. So let's focus on this trade and find the pin bar or find the 2618 trade in the 5-minute charts or 15-minute charts. Okay. You want to look up for this pin bar or inside bar breakdown. Okay. Inside bar breakdown or engulfing candle. Okay. All these three patterns. Okay, to confirm this 1680 is a very strong resistance and will sell the high. Okay. Any questions for the gold? And you can see that there's a divergence here. Okay, the gold has already make a bearish divergence here. The price getting higher high, but the RSI getting a higher low, a lower high. Okay, so this is actually a divergence. You want to sell the high and focus on to sell the pullback, right? And aim 1620. Okay, so good luck for this trade, and let's go back to oil. The oil has make a very quick crash on this Monday and hit $28, which is actually almost the 2016 low here. Okay, and then it formed a beautiful harmonic patterns here, and the ABCD patterns also complete. So this is tells us the oil is likely to make a bounce from here. Okay, and the 1.272 extension has passed. We're going to see the extension. Okay, you can see here the price is now between the 1.272 and 1.414. Okay, and which also give us another potential cipher patterns here. Okay, so this cipher pattern is implying the oil may bounce back all the way above 70. Okay, but we don't know whether this is going to happen in the future, but definitely 26 will be a very cheap price for the oil, and I don't think it will easily going down. Although the fundamental looks very, very bearish, the market is scared. However, if you understand what is harmonic patterns, and you understand that a lot of people are, are trading the news. Okay, after the news happened, the institutional players are actually closing their shorting positions. That's why you can see this pin here. Okay, a lot of people are, a lot of institutional buyers from here to buy those people's selling trade. Okay? So this is what my thought is. Okay, I think we are going to see a rally of the oil because this is a weekly harmonic pattern that this tells me the oil's rally could be strong. Okay, could be strong. However, you have to make very clear stop loss in the last week. Okay, because last week you want to buy from 43 level and it was stopped out. Okay, and the 1 hour chart, if you understand, your stop loss will be triggered at this point, and then you have to let it go. If not, you will be penetrate of this all those gap hit zone. Okay, you may be stopped at the lowest place. Okay, and a lot of people are suffering from these disasters. Okay? And right now in the 1 hour chart, we can see that the oil I published in the group that we could buy from 30.15, right? Anyone taking this trade? Who took this trade? Raise your hand. Yeah, because I sent this chart on Monday, right? I said this could be a very good place to buy the 618 plus the structure here. Okay, if you buy from here, you already earn about 300 pips. Okay, so this could be a good opportunity for us to catch the oil's buy. And let's go to 4 hour chart. Basically, 4 hour chart right now is still not a double bottoms because this, if you consider this a double bottom, you feel that the right bottom is a little bit too high. Okay, thus we want to make another entry point, which I can draw another new Fibonacci retracement of this wave, and I want to wait for another 618 pullback of 30.74. Okay, so 30.74 will be a good place to catch the oil's rally. Okay, see whether there's another wave, another leg up. Okay, and almost go back to 39.51. Okay, so notice that the price is always performing in this way. Okay, it going up and going down. Okay, and we want to find the lower place to buy. I want to find the higher place to sell. Okay, so horizontally we can find the structure that the 30.85 is exactly at the previous this neckline here. So I think the oil is very, very good idea to buy from 30.85 to 30.13, this level. Okay, you want to take a buy from here and aim for 39.48. That will be a very good plan. Okay, in daily chart, still consolidating. Okay, this is inside bar breakup. Okay, however, if you trade the inside bar, you have a little problem is because the stop loss zone is too big, right? It's almost 500 pips. You definitely you don't want to trade this 500 pips inside bar. Okay, so but you can find the small you can find the lower opportunities to getting this buy from here by using another 618. Okay. Okay, this would be included as the first target. And then it could form another harmonic patterns like this. Okay, like a cipher patterns here. Okay, generally speaking, I want to tell you guys that if you see the breakdown is very, very sharp. Okay, like this, very deep. Okay, it took time to digest this falling wave. So we can use this time spine. Okay, for example, if the last fall is from here, right, from 54. Okay, because this is a bounce from here, and then the crash from 54 to 26. All right, so we can measure this times zone here. It's about how many bars? Let me just count. Okay, from here to here, it's about 12 bars, 18 days. Okay, so 12 bars, 18 days down. Okay, it at least it will be using another 12. It should have another 12 days, 18 days or 12 hours to complete the consolidations. Okay, so we can see that before 25th of March, I think the oil is hardly to break this downtrend line. Okay, there's downtrend line here. Okay, or you can drop another downtrend line from here. Okay, so basically before 25th of March, the oil is hard to break this bearish trend. Therefore, in this consolidation period, okay, we want to buy the low. Okay, want to buy the low, buy the low. Okay. However, the big opportunity will come after this trend line was broken. Understand? Do you understand what I'm talking? Why do I say the big opportunity is because after the trend line was broken, now after the same time consolidation period has passed, okay, then the oil may start into a new era of rally. This is some conclusion we can draw from this chart, right? So things now is still 11th of March. We still have 2 weeks before end of March. So we don't need to be worried that I don't want to catch the trade. I want to just go in the trade to buy. No, you can just patiently wait for the lower place to buy, and you can take some profit and then re-enter here. Okay, but then the big opportunity will come after the trend was broken and it's established a new uptrend. Okay, so give me 5 if you understand this my theory. Okay, basically I'm telling you the consolidation, the time span, the ecosystem, right? Because this strong wave need to be covered by a similar time consolidation period, okay, which is about 18 days, okay, 18 days minimum, right? Okay, so after the 18 day has passed, okay, in May, you may see this trend was broken, and then it will start to move a very strong rally. Okay, so the biggest, the great opportunity will come here in this part, not in here, not inside, not under this trend line, but outside the trend line. Okay, so since this we can see that we are expecting the oil to be consolidating within this area, so we want to capture the low. Okay, just focus to capture the low. Whenever the price give you a patterns to buy the low, you kick in, buy the low, you kick in, all right? But don't aim too high because it's hard to break the trend line. But after that, when the trend line was broken, okay, then there's one more opportunity for you guys to cash will be the 618 pullback. Okay, 618 pullback. So this will be a very, very classic pattern that after a downtrend wave, okay, and if you see this trend line was broken, okay, right, and you wait for 618 to buy, and you can enjoy the next run. Right? So just to memorize these patterns, it could be very, very powerful and make you tons of money. Okay, who have ever benefit from these patterns? Give me 6. Right, like my students have always emphasized on this kind of patterns, right? Because this will be giving you a very super great trade. Matt and AB, okay, David, right? Good, very good. All right, so just remember these patterns to bear in your mind and wait for the patterns to happen for the oil, and then the great opportunity will come, right? And then we can earn a lot of money from this trade. All right, good. So let's go for the DXY. Okay, DXY breaks down. Okay, breaks down. We expect that this 99.97 is a great resistance, as I mentioned in my previous webinar, right? And I said the DXY have completed a double top. Okay, and now it seems the double top almost finished, right? Double top is complete, and now it's pulling back to the trend line. Therefore, we want to sell the dollar. Okay, we want to sell the dollar all the way to 92 or 91. But that would be a very, very big drop for the dollar. Okay. Fundamentally, I don't want to touch for more because now nobody knows how bad it is for the new the disease. Okay, as I know that now it's not only China have this problem, the Korea, the Iran, and the Italy, right? The coronavirus, right? And the USA have some problem. Is I think the government refused to release the numbers of the people who get infected, and some people may be treated as normal flu rather than this new, the coronavirus. So I don't know how bad it is, but definitely the Fed has already cut the rate, so the yield of the U.S. bond is dropped. It dropped a lot. That's why it pushed the dollar down. Okay. Yes, oil always to look only for buy the low. Okay, because you don't have much more room to sell. Okay, the problem is, right? If you want to sell, you want to wait for the high place to sell, like 43 or 42, but definitely it won't bounce to there so fast. Okay, it has to wait some time. Okay, so you can see the buy already kick in here. Okay, 30.50 is already the buy kicking, and you go to the 15-minute chart, you can see more clear. Okay, this is the gap. Okay, on the Monday, the gap's down here, and there's a small bounce in the Asia time, and at the noon 11:30 a.m. in the Asia time, it has to make another lower low. But in the Euro session, you can check. In the Euro session, it's here, 14 p.m. right? At the Euro session, the price makes a higher high. Can you see that? Okay, so why does the price make a lower low first, break new low, okay, to continue the trend? However, in the Eurozone, in the European trading session, it breaks new high, breaks this point. This shows the people, the traders or the institutional players in the Euro is bullish for the oil. They want to buy. In the US session, it looks the same, still buy, okay? And then they have the buyer took some profit to come back to the same place, 30.80, okay, to make another buy. All right, so this is what I feel. This is actually a trap. The bear trap is here. Okay, the bear trap. Okay, to make you feel that it's still bearish, right? But break new low. So let's go sell. But then, boom, it breaks new high. Stop all those sellers. Okay, that's why I'm telling you to only look for buy. Okay, because if you want to short, okay, most likely you may capture like this kind of a space. Okay, like from 32 to 28. Okay, but the upper room is higher. Okay, and the trend is starting to reversal. Okay, so that's why focus on buy the low. Is that okay? Okay, good. Okay, let's go to the euro. The euro dollar breaks a very, very important resistance, which is 1.1250. Okay, so here you can draw a resistance, or you can draw the structure here. It breaks the structure and pull back. So we want to buy the euro from 1.1250. Okay, the euro actually also formed the same patterns, right? Downtrend line was broken. The downtrend was broken, and we want to buy the pullback. Okay, buy the pullback. In 1 hour chart, it looks like a pullback is coming. So I'm still waiting for the 1.1250 because this place has not been tested yet. Okay, so capture this dip. Okay, buy the dip. Okay, alternatively, you can wait for the trend line to be broken. Like you want to use this as flag patterns or trend continuation patterns. Okay, doesn't matter. Just like this. Okay, just like this. Okay, if you see in the uptrend and the flag, right, the flag is broken, you can buy. Okay, so you can consider this as a new flag patterns as well. Okay, but you have to make sure that it stands above 1.1250. Okay, this is a very, very strong supporting area right now. Okay, so I'm gonna wait for the price to come here, and then we go back to break the trend line, and there may be another opportunity to come back to buy again. So this is our target for the euro. Okay, you can aim 1.15 or the euro may all the way go back to the 618%, which is 1.1876. Okay, so this could be my target. This could be potential gain. Okay, our profit zone here. So you want to buy and see whether it can going up. All right, the euro, I'm bullish to 1.18. Let's go back to sterling. The sterling looks the same. Okay, sterling also break 1.2850. Like I said in the last webinar, right? I said in the last webinar, the sterling is behaving in a consolidation area. Okay, by checking the numbers of candles consolidating here, I think you guys will understand more about my theory of the equal consolidation here theory. Okay, because you can see the downside, the down wave, okay, is using this kind of spanning this time, right? So let's just measure from here to here. How many candles? About 1, 2, 3, 4. Okay, let me just use it. Yeah, about 18 bars, right? 18 bars. So it actually took another 18 bars, or little bit higher than the 18 bars. It took about 17 bars. Is that interesting, guys? Is that make some point? Do you feel the same? Right? It's so interesting that the period of the downtrend and the period of the consolidation, they are using the same, almost spanning the same equal amount of time. Is that amazing? Right? 18 bars of down and 18 bars of consolidation. If you feel that, wow, this could be helpful, you can give me 5. Yeah, I have to check that you guys understand what I'm talking, okay? Because you may apply the theory in your own trading plans, okay? So just remember, if you find a downside wave spending this time, okay, you don't expect it to come back too fast, okay? It has to wait for the same time, okay, to consolidate. And you can expect a breakout, right? Last webinar I said the 1.2850 is rejecting the price, and if this price is took up, it will go up to 1.2980, right? Okay, so, and I think my students will remember the chart. I said we can buy the sterling after this breaking out the candle, right? Remember this candle? I sent my chart about here. Yeah, I said sterling break up 1.2850, we can buy, right? Is why? Because it has already passed the consolidation period and now it gives directions, okay? And you can see where, wow, this is huge rally, right? If you capture this trade, it gives you about 400 pips. Is that beautiful? Huh? Yeah, so this is the power of professional trading by understanding the market, by using the structure, by using the Fibonacci, by using the consolidation period, okay, by using the candlesticks patterns, right? The inside bar breaks up. Okay, I want you guys to pay attention to this kind of experienced patterns or profitable patterns so that you can do your own research in the future and you can make the same conclusion, make the same trading plan with me. Okay, so this is how to capture a good trade. Okay, you have to understand why the price consolidation are consolidating in this zone. Why it didn't make a new high and either a new low. What is the price doing here? Right? What are doing? Right? And you know when to pull your trigger. Boom. Okay. Breakout. Okay. Inside bar. Okay. Breakout again. Buy. Okay. So this is we have a logic behind this trade. Okay, and pay attention to the time. Okay, the time will have the same time to drop, okay, and the same equal time to consolidate. Okay, All right, you can just check like this. The price took the took the downfall in this way, right? And if you draw the time here, right, it took another this bar to recover, and then start to another draw, another fall. Okay, right. So now the study has come back to the same zone, which is 1.250, which I think is good to buy from here. Just buy again, okay? Because this is already break the trend line. Same patterns just appear, just right, occurred over and over again. All we need to do is to find the patterns breakout, pull back, right? Good, let's buy from 1.2850, right? The price already shows a very strong pin bar here. This is a very long pin bar, right? It tells you, okay, good, buyer is here. Okay, let's just follow the buyers. Let's go buy here. Okay, in daily chart, yeah, find some support. You can see there's a potential Libra pattern as well. Why I said this is a Libra pattern? Because yeah, isn't that okay? The Libra pattern come here. Okay, so my view of sterling is bullish and we're going to buy. Let's move dollar yen. The dollar yen go to 102, and the dollar yen already I think covered the touched the previous support from here, and the ABCD pattern is almost complete. Okay, almost complete. So I think the dollar yen could be reversal as well. So in the case, let's go back to sterling yen. I think the sterling yen will be a very nice place to buy. You can see the sterling yen make a very strong rally here, and there's no pullback. Just 2 weeks ago, there's no pullback. This is always strong. Okay, and then price just sharply falls down to the 132 level. And you look left, there's a structure here. Okay, and there's a 618 place as well. So yeah, you can buy the sterling yen as well. Okay, sterling yen will give you a very good profit. Almost always to 150, I think. Yep. Don't be surprised that sterling will be a shining star, a superstar of the of their pairs. Okay, because sterling yen will really move fast, just like this. Okay, you can see here, sterling yen make a reversal first, and then pull back, and then boom, just with quite similar patterns of the sterling yen. So I will be buying the sterling yen as well. All right, good. Go to Aussie. The Aussie dollar has a super long pin on the Monday, testing 0.6450, and this pin actually is very long, about 200 pips. And then we can buy the Aussie because this is a 3 times testing of this place. I think the Aussie is safe to buy from this level as long as 0.6450 is not broken, so we can consider to long the Aussie. This will be the in the same path of the week of the dollar index. Okay, the dollar goes down, the major pairs goes up. Okay, so Aussie is a buy. Okay, Aussie already formed the inside bar, breaks up, right? This is inside bar. Okay, breaks up. Okay, so you can buy Aussie right now. Similarly to the Kiwi also you can buy. Right, Kiwi also testing the 0.62, but failed to break new low, and the price come back to retest again. Okay, and start to rally. So I think Kiwi is good to buy again. Dollar Canadian find support from 1.35. Now the resistance was broken here. This resistance was broken. So I think that the dollar Canadian aim to 1.40. 1.40. So if you use the Fibonacci level, you can see the dollar Canadian has already passed the 618. It may test the 76. Okay, it may even goes to okay, not the ABCD patterns, but the Fibonacci extensions here. Okay, let's just measure where it may go. 1.408. Okay, so this is telling me the dollar Canadian likely to move to 1.4089, okay, before it burst. Weekly flag, yeah, of course, the flag is broken, right? It's drawn because the gap is not filled, it just shoots up. Okay, it's a week of the oil. The Canadian dollar didn't really appreciate a lot, right? In my opinion, because remember, let's just compare. Okay, let's just take a comparison. Um, so we compare the oil with the dollar Canadian. What you can find is in the last time, you can see there's just a little lag between these two pairs. Okay, you can see here the oil stopped to draw from here, right, all the way to the lowest price 25. Okay, the dollar Canadian didn't really going up very fast. Okay, because when the oil drops to here, the dollar Canadian just rally a little. Okay, and then the dollar Canadian keeps rally to capture the same phase of the oil's drop. Okay? So the last time when the oil dropped to 27, the dollar Canadian was at 1.46. However, now you can see that the move doesn't match, right? The oil already drops to the previous low, but the Canadian dollar didn't really go so high. So that's my fear is the dollar Canadian may still have some room to go up. All right. How about Canadian yen? All right, let's check the Canadian yen. Of course, we have a long position Canadian yen, and it was stopped out here at our 81.60. Okay, because this place has been violated. Okay, breaks down and pull back. Okay, so yeah, and then it have another 700 pips down of the Canadian yen because all the yen pairs goes down very hard. And now the Canadian yen has touched the lowest price, I think, 75 level, which is a previous all the way support for the recent 6 years. Okay, so I think Canadian yen you can find to buy because if the but that will be part of the reason of the yen, the dollar yen is going up. Canadian dollar may still goes down. Right. Let's just check the like Aussie cat. You can see the Aussie dollar versus Canadian dollar. The Aussie dollar is going up. Okay, so Aussie is stronger than Canadian dollar. The Kiwi Canadian also going up, right? And the Canadian versus Swiss franc going down. The Canadian versus gold. Okay, so let's just check whether it has this. Yeah, you can see the gold is appreciating with Canadian as well. So Canadian is really very weak. So my suggestion is to short Canadian, which is to buy the dollar Canadian. You can buy the Aussie Canadian or buy the Kiwi Canadian. Okay. All right, let's go to the Bitcoin. The Bitcoin is good place to buy, and just 3 weeks ago, when I published that I want to buy from 7,900, it looks like people are not believing the truth that it may fall back to the 618 level. In fact, it touched the 76, right? However, in the daily chart, I will feel that if you believe in this strong rally, this could be just a a retracement of this rally, and I think the next move could be still going back to 11,000. So it's good to buy some here and touch my price. It's a perfect entry zone here. Okay, the institutional players are buying here. That's why you can see this bullish move. Okay, so this become a very important structure for us to buy the Bitcoin. Okay, and same for the Ethereum. Okay, the Ethereum also come back to 200 level, right? And I think 200 level is good to buy because this could be the neckline of this round bottom. Okay, this is a round bottom. Very nice reversal. Okay, the neckline is here. So buy the Ethereum from here. You can put your stop loss below. I think put your stop loss below this. So 154 will be enough. Okay, so just use this zone as your risk. You want to capture another wave to, okay. How about Aussie Kiwi? I won't suggest you to trade Aussie Kiwi right now. No, don't trade Aussie Kiwi because the dollar, there's a rule, okay? Okay, there's a rule. When DXY is, you know, is in a trending, it's in a trending session, okay? Do not trade cross pair. Okay. Okay, the reason is simple because when dollar is like the dollar is going down, the Aussie will goes up, right? Okay, when dollar goes down, okay, when DXY goes down, what will happen to Aussie dollar? The Aussie will goes up, and the Kiwi will also goes up, correct? Am I right to say that? Okay, when dollar goes down, is dollar is in a trending session, the Aussie will keeps going up, the Kiwi will also keeps also going up. Okay, but if you're trading Aussie versus Kiwi, what will happen? What is the answer for a pair that is keep going up versus another pair is going up? You are actually cancel each other because when you trade Aussie Kiwi, for example, if you want to buy, okay, because I believe that when the Aussie Kiwi is in about a 1.03, right? I think from the value investing point, you want to buy because you want to aim for the rally, right? Okay, let's say you want to buy the Aussie Kiwi. You are buy Aussie versus dollar, and you are selling Kiwi versus dollar. Okay, you are doing these two pairs at the same time. So your buy position of the Aussie will be make some money. Okay, this will make you money. However, since the Kiwi is also going up, if you sell the Kiwi, this trade is actually losing money. So you are canceling each other. Okay, your trade is canceling each other, which means the Aussie versus Kiwi is no good to trade right now. Okay, you can just simply buy the Aussie and buy the Kiwi at the same time. It will give you a better profit. Okay. Yeah, buy Kiwi versus dollar, buy Aussie versus dollar will also give you a very big rally, but not for Aussie Kiwi right now. In fact, I won't suggest you trade Aussie Kiwi at all because if you are not people who lives in New Zealand and Australia, you don't really rather to bother the ratio between the Aussie versus the Kiwi dollar. Okay, okay, this pair who will actually pay attention is for those people who living in Australia but working in New Zealand, or vice versa. Okay, if you are living in New Zealand but working in Australia, okay, and because you have to change the money, and okay, and change back to your home country's money to spend in your hometown, right? And that's why people will actually focus on this ratio. Okay, and this ratio will also works from the government of the company, the corporate between the in the Aussie, Australia and New Zealand, but not for traders, not for our the investors. Okay, because the overall of this pair won't move too much because the extreme is at about a 1. Okay, 1. The extremely high is about 1.33. Okay, the only 36% of this pair. But if you check Aussie dollar, how much percent it could give you? Okay, the lowest is 0.5, the highest is 1.1. This doubles, right? 200%. Okay, 200% move. Okay, and a 50% down. Okay, so this is different. Okay, totally different. So Aussie Kiwi is not a pair that for you to to really to invest in. All right, good. So last but not least, go back to S&P. Okay, S&P. I'm telling you guys, I'm buying S&P right now. Okay, the S&P already falls to a 618 level and makes a very good price action. And I think in my group, one of the students already discovered the entry point, right? He said it's a 2618 trade. Okay, I agree. I totally agree. It's just like you can just treat this as same as the sterling dollar. Okay, same as sterling dollar. Remember, the sterling dollar took the same took the 18 bars to come down, right? So let's just check if the S&P took this much time to come down. How much time it could be used to cover this short? Okay? It's coming. It's coming. Just like another 2 days. Okay. All right. So we can expect. Okay, before March of 13. Okay, the S&P will finish the consolidation within this period, within this area. Okay, and since the supporting is coming, okay, we can see the reversal, right? This is a reversal here, makes a higher high. That's why it is called a reversal, right? And we can just wait for a couple of days. And the key zone is 2895. Okay, 2895. Okay. So what I'm expecting is, I think the S&P will break to 895, and then you can consider to buy the pullback, and then you will see another rally. Is that cool? I see that I can draw the future path of this S&P in front of you right now by using the strategy we discovered from a lot of pairs, right? Okay, so a very strong down wave followed by a equal length of time of this consolidation, and then you just wait for it to break the structure. Okay, break the structure, break the neckline, and then pull back. You want to buy and aim for 3,000. Okay, understand? Are we clear? Good. All right, so that's all of today. Yeah, we covered most of the pairs. So no matter what will happen, we are just still very, very patient to find very, very professional to find all those winning trades and high quality trades. Okay, that's my job. That's my task. And it's my task also to inform you guys, to educate you guys that how I look at the market. And I hope that I wish all of you guys can understand my logic and understand the behavior, okay, of all my thoughts. And hope that it will give you a little bit better of your trading, okay, to enhance your trading result, to enhance your trading habit, to enhance your trading systems, and make some money. All right. Okay. So yeah, plan your trade and trade your plan. All right. If you are interested to learn from me, you can go to harmonicasia.com to find out my course. Okay, which has benefited a lot of people, and you can continue to sign up the my professional trader course here. Okay. And all my strategy will be released to you, and you can rehearse of the training videos over and over again. Okay, yeah. So I'm waiting for you to learn from me and join my students club. All right. See you next time. Bye bye.